entrepreneurs, but my husband and I actually owned a dating company. So it's kind of weird from going from a dating company to real estate. But we owned a company called Adventure Connections, and we did singles events. And we were actually before Facebook, so we had the online presence. So we would do online dating. Actually, before online dating, we were doing the phone call mailbox, where
Oh,
you have to actually call into a mailbox and you can retrieve greetings from people wanting to go on dates. And so from the mailbox went to the online, and then we went to personalized dating.
oh,
But you know what? It was so much fun. We really did have a lot of fun, from like speed dating events and all of that. But it didn't make much money, and we were actually dabbling in real estate investments. So before I became licensed, we were dabbling in real estate investments as well, and that kind of took off. And so our dating business kind of dwindled, and our real estate went up, and our
wow.
portfolio increased. And so I've been a mortgage broker ever since then.
Oh, cool. So how did the past business help you in your real estate? Is there anything that you've learned from that pulling forward into what you're doing now?
Well, yeah, for like matchmaking, we would have to sit down and interview people and find out what's going on with their lives. And it's no different now in my business. I say, don't be afraid to tell me what's happened in your life. Don't be embarrassed. I'm here to help you. So I need to know what's happened, how I can help you. It's when customers or clients aren't telling me things, and then it's during the mortgage process I find out things, and it's like it's too late. I could have we helped you with this. We could have had another strategy for your situation. So the dating business, when you're matching people, is no different than matching your mortgage to your home to your investment portfolio. It all works the same way. So one is for love and one is for love, love of other things.
Love and then money to actually go out and play, right?
Exactly.
So
Exactly.
you said something that's really interesting there is that people, life happens with people, and getting to know people on a personal business, like on a personal level, getting to know the details of their life so you can match them really well. So in what I do in real estate and what I teach my students to do is it's an awful lot about, not focusing on what's going on in the economy or focusing on finding the perfect deal, but working with people and providing outcomes, and real estate being the tool that we use, money being the result. And part of what we do is we like to help people to be able to own homes. And so in order to do that as real estate investors, we may not need a broker to buy a property necessarily, because I do teach how to buy properties without having to have a mortgage, but we do help other people to go into those properties. And quite often, and also for those of you who do rent to owns, you need to have a broker working with your client in order to be, or your home buyer, to be able to own that home. So how is it that you would work with somebody that is looking to be able to buy a property, or has a client that is looking to buy a property over a period of time? When do you like to meet with those new home buyers to be able to help them get on track? Because quite often we're working with people that have no credit, which we're going to get into in a little bit, but maybe people that have bad credit or no credit sometimes. So what is the process that you do, or how important is it for real estate investors to have a relationship with a broker that can help their clients?
That's a great question, and it's actually very important. It's important for an investor, especially. They may have multiple realtors or multiple brokers, but it's important to establish a relationship with the broker, just so it's more of an honesty thing. Like I'm not going to work with a client when I know you're going to work with your clients being with another broker as well. I like to work with the client at the very beginning, especially if it's going to be a long-term process. If they're not buying a house now, in whatever agreements you have in place, I need to know what is their credit like, and how long realistically will it take for them to own that home. Realistically, if you're going to write a contract for 1 year, well, what if it might take a bit longer? So it's important to work with the broker so they can look at the credit, say it's going to take them a while or it might not, and then work with them for the process of improving that credit.
So yeah, so we're going to get into in a few minutes here about improving credit and things about credit. But tell me maybe real quickly, And I'm glad that you said that it's a process, because a lot of times people think that it's something that, can just happen really quickly. You just find out a little bit of information of what they need, you tell them what to do, and then, it's all set up. And at the end of the day, years down the road, they'll be ready to go. But you kind of need to walk them through it throughout that period of time as well, don't you?
They need a constant reminder. I think everyone needs that constant reminder. There's a reason why some people have gotten them in a situation that may be hard to dig out. And I tell my clients that time does heal all wounds. So if you get to a situation like I blew my credit, I don't even want to look at my credit. It's like, no, you know what? We need to deal with it because it does take time. But if you start to work on it now, it will get better. So just realize that. And I lost my train of thought.
That's okay. That's okay. It's easy to do. So no, but that's really good, because what you're saying is that it's not just a one, meet and set things up and it's fixed and everything will work out fine at the end. What I wanted to lead into is the difference between working with a mortgage broker and working directly with your bank. Because quite often people say, well, I've got a relationship at my bank. And so they'll just go with their bank to go out and try and get a mortgage. But sometimes the banks won't work with you quite the same way as a mortgage broker will. And they definitely don't work with you as far as a real estate investor who's working with a client, maybe you with a rent owner with the fishing formula, which is what I teach, is how to be able to prepare that client to be able to own that home after a period of time. And so you're not going to get that kind of service with a bank. So I wanted to sort of bring up the difference between working with a broker and working with a bank. If somebody's looking at, who should I go with and why would I go with a broker versus a bank that I already have a relationship with?
Yeah. And I get that question often. And I have to say, though, I work with both other brokers and with the bank. So I don't see them as competition because I've had bankers refer me files and sometimes I refer them files. But I think it's important to realize that a bank has really one of they have their own bank's mortgage products, and that's what they have to go by. And they're under federally regulated guidelines and they have to follow those. So banks have become more stringent. And again, I work with both banks and other brokers, so I'm not here to bash other banks. I'm just saying that as brokers, we actually have more alternative with lenders. There are those A lenders is what I call them, that are like the banks. And then there's alternative lenders. So if you don't have, let's say, the provable income, if you're commission based, especially for self-employed people, or if you've got blemished credit, you might not fit under that guideline of the banks. And I think it's important to realize as well that relationships are important, but it's also important to diversify your assets. Unfortunately, I have seen too often where a client will have everything at one bank, their credit cards, the lines of credit, their mortgages. And it's all great because it's convenient to have everything in one banking system. But you never know if something happens. And life does come and surprise us. And unfortunately, yes, and you don't expect it, but I have seen more than enough where if everything's held by one bank, they've got way too much control. All of a sudden you start missing your mortgage payments, they'll shut down your lines of credit and everything become on demand, due right away. And you're stuck. Everything was
actually seen, and I wanted to add in there, I've actually seen, well, not with myself, but with some of my clients where a person has everything all at one place and they got behind, got behind on payments, and the bank just took money out of their account because their mortgage was at that same bank.
Yes.
And they took money out of the account, out of another account, out of their savings account to cover the payment that was supposed to come out of their checking account. I didn't know banks could do that. That shocked me.
So I have your eggs in different baskets. And again, I have seen too often, and I do get clients that says, I bank with this bank, so get me a mortgage at this bank. And I'm like, this is a great bank, but there are other lenders very similar, but let's just move it around so you don't have so much under one umbrella. Diversification, I think, is so critical.
Yeah, I've talked about that a lot in our group too, even with just credit cards and so forth like this, and having, your mortgage payment coming out of different bank from your credit cards and stuff, because some of the things that we do is we get into, and we'll get into that a little bit more in this talk here, but we get into how do you best utilize what you have available to you to be able to get rid of debt as well. And when everything's in one place, it does make it harder to do that because you don't have as much control because everything is under one guise. And if they pull a plug, they pull the plug on everything, which is, you know, you have to be watching that. Now, I did want to talk a little bit about here because this is really, I agree with you. I think it's really important to have a relationship with a broker in the sense that they can represent for you to the banks that they think is going to be best for you, whether it's an A lender or a B lender. So you're not worrying about what you need to have available. This is what your job is, right? You tell everybody, you know, this is what I need from you, and we need to work on this and this to get, you know, maybe over time to fix a few things. But you're going to be able to help point out what a person needs to work on in order to be able to apply for a mortgage.
Yeah, and that's So as a broker, like I've been doing it for 16 years. Whereas a banker, they do mortgages, they open bank accounts, they've got a lot of hats under their their role. Whereas mine is just mortgages. So I know immediately what we need to do. Like it's repetitive. Mortgages is what? Rinse, repeat. What's that term?
Yeah, rinse, repeat. It's basically keep doing the same thing, right? The thing that makes it different are the people though, right? And that's why, you know, there's no judgment. You just have to tell Tanya everything that is going on, or your clients do, in order to be able to have her help you the best. And then she'll shop what's best for you.
Yes.
And she'll tell clients, and correct me if I'm wrong, but you'll tell not clients, but you'll tell the banks or the institutions that you're working with what is needed to be known about these people, but you filter that information. You don't give them like blah everything, right? But
the best advice I ever got was actually from a business development manager. And when I was brand new, I would say and do everything. And then one day he goes, just only tell the lenders what they ask. Don't go above and beyond unless there needs to be an explanation. So the biggest thing, especially those with blemished credit, is I got to tell like a compelling story. It can't be, sorry, he went bankrupt 2008 from a divorce. Boom, move on. No, you got to tell a story. Lenders need to be sold because that's a lot of people don't know that. So one of my, what I had to do is actually tell a story as to why he went into financial hardship. Even if it's a divorce or business failure or CRA payments, lenders need a story because they take that story and they have to sell it to the insurers.
So that's why you need to have the story to work from.
Exactly.
Cool.
Lenders don't know who you are and they don't care, right? Oh, they care. They've got so many other applicants, so they're just taking what you tell them and they're having.
So it's kind of in a way like if you go to meet with a lawyer and the lawyer will ask you all kinds of things. And then ultimately they will represent you in whatever capacity in disclosing what they feel is necessary to be disclosed going forward.
Yes.
Same idea, right?
Exactly.
Cool. Okay, so some of the things that I wanted to do here is I've got some questions so that we can follow through because I didn't want to get lost in the whole concept of, hey, this is all new, but I think we're doing pretty good. So we talked about, you know, keeping everything separate. Now, there are some new rules regarding mortgages. So how do these affect new and subsequent buyers as far as the new rules that have been coming out? So for example, CMHC has new rules, and, you know, I know that there's other institutions maybe other than CMHC that you could work with. So maybe I'll let you summarize that.
So there's three mortgage insurers, and that's if you put less than 20% down payment. But there's CMHC, which is federally regulated, and then there's two private insurers called Genworth and Canada Guarantee. So on July 1st, CMHC released mortgage changes, but Genworth and Canada Guarantee has not followed through with those changes. So it's great because if the two other insurers have followed suit, we would probably see a drastic change in our housing market. But because they haven't, we're so far so good. But the three changes are, the first one is debt ratio. So we calculate what's called the GDS, which is taking your housing payments, your mortgages, your taxes, your condo fees. That was at 39%, has now been reduced to 35%. Again, this is CMHC rules. And then the total debt ratio is what we use as well. That's taking in all your debts. So credit cards, your auto loans, that used to be at 40.
Student loans as well, things like that as well?
Yeah, all your debts. Used to be at 44%, and then it's been reduced to 42%. So the main difference now is GDS is 35% and TDS is at 42%.
Cool.
Yeah, so the second one is credit score. Now, the credit score, the lenders have over the years increased the minimum credit score. So it used to be kind of 580 to 600, which is considered fair. And then some lenders over a couple of years implemented 620 as a beacon score. The new rules now is the credit score needs to be 680.
Okay, so maybe for those people who don't, because I've got a few people in my program, but also, you know, here in the group that might not actually understand, what does that mean? Like, what is your credit score and why is it so important? Like, maybe explain a little bit about that, because a lot of times people don't understand what that number is and how it relates to them.
Sure. And when I get an application, I sometimes have clients go, oh, my TransUnion score is 800, so it's excellent. And I'm like, oh, TransUnion and Equifax are so different. Like, it really is. So a couple things. I tell my clients, if they want a free credit report, for Equifax, which is what most lenders use, you go to borrowwell.ca or .com, and it gives you your Equifax score. And for TransUnion, that'll be Credit Karma. As a free reporting agency. Most lenders do use Equifax, but the insurers would check both Equifax and TransUnion. Credit score is vital. It's what the lenders, it's like the minimal what the lenders look upon, and so do we. We look at what your credit score is. 650 at one point was considered satisfactory. Now most lenders do want that minimum 650, but again, CMHC is now 680. 680 back then, I used to say, oh, that's an excellent credit score, but now I hear 720 is an excellent credit score. So it's a credit score is determined by what kind of debt you have. The length of credit you've had is what we look at as well. So if you've got brand new credit, you might find your credit score a little lower.
Because you just haven't built it up yet, right?
Exactly. So our rule is the 2 years. So keep your credit history longer. Don't close your oldest credit cards.
Yeah, that's a good point too. I've talked about that quite a bit with my group, is that, you know, you don't want to be getting rid of credit cards. Quite often people go, oh, you know, they start to build up a few and they think, oh, I shouldn't have this much credit available to me, because what if I spend it all or keep, you know, I have, you know, the potential to maybe get myself further in debt. So people will start getting rid of some of those older cards and not realizing that that oldest card is really the most valuable of all of them, because that's the one that shows your history of credit, right?
And lenders, unfortunately, likes to see debt. It shows how you manage debt. And another one is utilization. So don't use more than 50% of your credit limit. If you're always maxing out your credit limit, and then you pay down to zero and you max it out again, it actually does improve your credit score. So we say don't use more than 50% of your credit limit. And yeah, longer history is better, and keep it a variety. Don't just have auto loans. I hate to say it, but we do need to see that you have debt. Mortgages are considered good debt, but credit cards, you know, you have to be careful, but lenders need to see that you can manage those debts.
Yeah, exactly. Because I've had one of our students actually asked me to ask you this question. So he's got a credit card and he's wondering if whether or not he should, he wants to buy another property. Okay, so here's the problem with real estate investors, right? We want to buy property, but you know, if you buy too many, they'll stop you. We'll get into that in a little minute here. But also, his question is more around, should he wanted to use this card to pay off something else, right? And should he pay that off before applying for a new mortgage, or should he leave his card clear and apply for the mortgage and then pay off what he was going to use in his card? So which is better, having the debt on the card or having it available to him prior to applying for a mortgage?
You mean a credit card?
Yeah. So for example, he's got a credit card. Let's just say a $30,000 credit card available limit. It's cleared right now, but he wants to pay off a private debt with this. So if he were to take and pay off that loan, that private debt, should he do it prior to applying for a new mortgage on another property, or should he pay that off afterwards? So in other words, should he have the debt on his credit card first, or should he have partial debt on it, like 50%, like you were saying, or should he just wait and pay it off after he's got the new mortgage?
So if the private debt's not on the credit bureau, then don't touch it. Don't use that credit card. If the private loan is more than what the credit card loan, so if you've got like, let's say $10,000 credit limit and you max it out and they say, oh, but my payments are only $200, we don't use that. We use 3% of the balance. So that'll be $300, right?
Okay.
And so that might affect your debt ratio. So if that private loan is much higher, like $1,000 a month, and using a credit card to pay it off will only result in $300 a month, and it's going to make a difference with the debt ratio, then do that. But don't forget, when you pay off your credit card or you shifting credit limits, it takes a while for the credit bureaus to recycle.
Mm-hmm.
So you might have to wait a while. It might take 30 to 45 days, and then we might not even see the change in your credit score right away. So it's about timing.
Yeah. Okay. So it's better to actually, that's another reason to have a broker, right? Because that'd be a question to ask you, should I do this or should I do that? I have some choices. They can sit down with you and look at what cards they have, should they move something around beforehand, or wait till afterwards and such.
Yeah. And we do that as well, especially with auto loans. Some of the auto loans are so high that we have to work with the clients to work with that. So yes, So work with the broker first before maneuvering debts, because that can just cause more issues.
So it's not just a matter of putting an offer in on a property and hopefully you get it. Sometimes you put an offer on a property and you might want to have a longer possession date, so that you've got time to work some things behind the scenes before you actually apply.
Yes.
Okay. I have a question for you too. This comes up a lot and I usually just answer it, but I think it'd be good to have you do it. Can you explain the difference between the soft and hard hits on your credit when you do pull a credit report? And, for example, landlords, if they're pulling credit on a tenant, how does that compare to, pulling credit for a credit card or pulling credit for a mortgage and so forth like that?
Yeah. So the rule of thumb is I tell my clients, don't have your credit pulled more than 7 times a year. There is a new rule coming with Equifax, and that's coming into effect September 14th. So it used to be if a mortgage broker pulls your credit, and then you start shopping around and you go to different mortgage broker, they'll pull your credit. These are hard pulls, which means your credit score is affected.
Okay.
The new rules starting September 14th, if I pull your credit and then a mortgage broker pulls your credit, my first pull would be a hard pull, but then anything within 45 days would be a soft pull. And that's actually to protect the consumers. That allows them to have more transparency, that they're not unhappy with one, they're not stuck with that person because they had a hard credit pull. Mm-hmm. So the new rules is that you can have multiple pulls within 45 days. So as a broker, if I pull it, it's a hard pull. When I submit to lenders, they actually do what's called a soft pull. So they have to verify that everything was exactly what I submitted, but it won't affect your credit score. You'll see that the lenders have done a soft pull on your bureau if you do like the free credit checks. If they submit it to CMHC or Genworth, they as well do a soft pull.
So what does that mean? Like a hard pull, soft pull? Why is a hard pull? And I mean, I know the answer to this, but why is a hard pull worse than a soft pull?
A hard pull affects your credit score. So you see your credit score dip. A soft pull is just inquiry, a glance into your credit report, and it doesn't affect your credit score.
And so go ahead, sorry.
Yeah, and then when you ask about the landlord, there's actually different calculation, but if a company pulls your credit report, it'd be a hard pull.
Okay, so in that case, it's probably, if you're working with tenants, is to maybe ask them to pull their own credit so that it doesn't end up being a hard pull. But at the same time too, if it's less than 7 times in a year for that person, it's probably not going to hurt them, right? Unless
I think the reason why they don't want, we say 7 times, is because shopping for whereas debt is good, constantly shopping for credit is bad. So these hard pulls prevent you from shopping like crazy. And I don't know if you remember when I was young, I would just apply for credit cards just to get the free promo stuff.
Yeah.
It was bad for your credit. So, and I've seen, like, especially back then or even now, it's the auto pulls. You see like 5 auto pulls in one day. And that's going to change. I think that's why the new rules are changing, just to protect the consumers, to allow them to shop. But they don't want you constantly inquire about credit constantly. It's just more manage your credit.
Good. Yeah, because it is a good way to find out, where you fit into being able to get maybe a better rate and stuff. But you want to be super careful that you're not going overboard, because you don't want to be dinging your credit and making someone who's got a perfect credit score suddenly doesn't, just because they've been inquiring about things.
Yeah. And as a broker, though, I pull it once and then we find the right lender for you. Whereas a bank, they have to do their own hard pull, but then it's kept internally. And if they can't finance you, then you have no choice but get it pulled again elsewhere.
Right.
But again, with the new rules, that shouldn't affect your credit.
As long as you do it within 45 days.
Yeah, exactly.
Cool. Yeah, because I remember there was a time where if you went with your bank and they turned you down, or a credit card company and they turned you down, then you go somewhere else and they're like, well, I see that you already applied somewhere else. Why didn't you get it? And then they kind of are thinking, okay, there's something you're not telling me because these other people turned you down. So they might turn you down also, just because they think something is wrong, that you're not disclosing.
Yeah. And moving forward, it's actually about transparency. And that's why Equifax has released this new changes, is me as a broker too. If I submit to a bank, get declined, submit to another bank, get declined, submit to another bank. It used to be that I don't need, the customer doesn't know who I submitted to. I just like, look, I can't get approval. But with this transparency, clients can now see in the credit report, oh, we went here. But what's also bad is other lenders will also see where it's been declined or not declined, but it's been sent to this lender. So, and that question would be, what happened with this lender? And so that opens up a different type of scenario, and we won't really know till September 14th.
And this is kind of where it comes in, where you tell the story, because you're able to present the whole situation in a way that's going to be positively received.
Yes, exactly.
Yeah. Cool. I just want to check to see what else I want to make sure I covered with you, because there's been so many things we've covered already.
No, but the last one mortgage rule changes for CMHC is no more borrow down payment. So they want your down payment from your own resources. So I didn't want to miss that one in case.
Yeah, that's good. Yes. Because you used to be able to borrow it. Now, can you still show evidence of down payment by saying, I have an investment here, I have this, I have that, like showing the ability to come up with it? Or does it have to be in your bank account for 3 months prior?
No, if you got RSPs, mutual funds, we just need 3 months statement of those mutual funds. It doesn't have to be transferred into your bank account.
Okay, which is really good, because a lot of people think that they have to cash those investments to use them. So in other words, what you're saying is that you can show that you have the ability to use your own money, but whether you pull that money out or you borrow money from another place instead of, that's okay with them. Is that what you're saying?
Yes, and if I can make a big suggestion, if you know you're going to buy a house and you need a down payment, and it's in one account or multiple accounts, but it's good, like I have too often clients transferring money here, there, everywhere. Keep it in one place, or before you make a bunch of transfers, talk to your broker. And because a bank, every time you transfer, they need to see where all that transfer went. And it gets complicated, and you have no idea. It's usually the down payment that gets stressful. Is when we have to pull multiple bank statements because of all these different transfers. So anything above like your pay stub or above $2,000, the banks needs to know where that came from when it's in a bank account, not investments, but in a bank account.
So I have a question. It's kind of off topic here. So if a person is working with, say, a partner, and one person, like a business partner, and one person is going to be putting the money down for the down payment, and the other person is qualifying for the mortgage, how do you present something like that? Or do you think that's a good idea?
It depends. So it depends on their down payment, and it depends if it's like, are they going to buy as a rental property? Are they going to flip it? It depends on the scenario. So yeah, I see a lot of JVPs and all those things, and it just depends on their scenario how best to put that in. But it depends if they've owned multiple investment properties as well.
Yeah, because sometimes that's why people will joint venture with someone, is that they've been kind of stopped. Like, okay, you own too many properties, your debt ratio is a little bit too much for us to feel comfortable to give you another mortgage. So we have to look at alternative ways to get into the continue to do our business, right?
Right.
And some of the things that we do talk about in the group here is what's coming up, this new era of real estate investing. And I just want to sort of slide into that a little bit because it's not really new. One of the things that I've been teaching for myself, I've been doing this strategy for 27 years. I've done 656 deals to date this way without ever qualifying for a mortgage or using my own money. And I've got 5 more deals I'm working on. But the thing is a lot of people don't realize that this is not new. Pre-World War II, people actually didn't use banks as often. They didn't get mortgages because of the fact that you had to have 50% down back then. And most people wouldn't have 50% down. So they would work directly with the seller and the buyer together to make a deal work. And we're kind of coming back into that again. We're seeing an awful lot of that. And I mean, I've been doing it for decades, and it's nice to start seeing that people are waking up to it. It's like this new era in real estate investing because people are being forced to go back to doing this. It's not really new. It's like the new old, right?
Yes.
And people are being forced to be creative with their deals and find other ways to buy property without using a bank. And so how is this affecting, for example, like lawyers and realtors? I mean, I know a lot of realtors, aren't they having deals falling through and stuff?
So it's important to work with a realtor that understands, I guess, utilizing creative solutions for purchases. And you're right, things have changed, making it much more difficult to qualify for mortgages now. And lawyers as well. You need to find a lawyer that knows how to understand creative solutions and financing. I spoke to one of my lawyers last week, and he had 4. Now, it depends what solutions you use. It could be rent to owns, agreement for sales. You have a different technique.
Yeah.
But he's go, oh my God, I got 4 different creative purchases this week, and he's never seen that many. And a realtor as well, like my husband's a realtor. So when he calls and like, listen, my client doesn't qualify. Are you willing to do it this way? Some realtors are like, huh? And a confused mind says no. And realtors need to get on board as well and realize you need a different way of selling your properties because we're in a flat growth. Like we just are. I know there's some from Vancouver.
Here in Alberta especially, right? Like, because I know in some places, like we've got some people here in the group that are from like Windsor, Ontario, where the market
you're fine.
Right? Yeah, you're fine.
Yeah, Ontario's doing well, and that's because it's just more diversified but yeah, with our market, listings are on the market much longer, and they need to understand other ways of selling. And so finding a realtor that understands it, a broker that knows how to work with it, and a lawyer that knows how to put together. So you need a team. Like
you do. And I would say that even in hot markets like in Ontario or even out far East Coast is actually doing really well, and on the West Coast. We've got some places in Alberta and central Canada that are a little bit different of a market, but even in a hot market, realtors may be selling properties that are over asking price and stuff like that, but there's going to be real estate investors like what I do, where you're not necessarily focusing on properties that people can sell through a realtor, but you're also working with directly with sellers that can't necessarily sell for their realtor. Maybe they don't have equity in their property and they can't list it because the realtor is not going to get paid, or they have to pay to get out of it. Right. So there's all kinds of reasons people sell privately that can't sell regularly for many different reasons. Like it just baffles my mind the reasons people would sell without a realtor, but that's okay. I'm willing to work with those people. But the other side of that is you still need to buy that property. You still need to close on it. And if it's a creative deal, like you said, realtors, not just realtors, but lawyers have to get up on speed of what's going on and how this new era of investing in real estate is actually affecting so much of the real estate in Canada and in the US, unlike ever before. So if they don't get on board, they're going to get left behind. Right. And as real estate investors, we have to be ready for that. We have to be ready for what's coming down the pipeline. And it's not even what's coming, it's here. It's happening. I mean, look at COVID. This is, to me, my understanding is that a lot of the reason we're seeing all these changes in the banking industry and being able to qualify is because people now have to prove that they're an essential worker or they're self-employed and being shut down and working from home like we do isn't necessarily affecting them the same way. Is that right?
Right, exactly. And with COVID, that's exactly why the new mortgage rules changes came in effect, is to mitigate all the risk with the mortgage deferral program that's out there, to people not that's just getting the CERB, which we can't use as income for mortgage qualification, just to let you know. But
That's good to know, actually.
no, but you know what? Alternative lenders will use CURB, but if you're talking about other lenders, they won't use CURB as a source of income. And a lot of lenders actually want to see that you are working and return to work, and they will put your mortgage on hold, except for those that's already gone through, like a mortgage application approved and accepted. But moving forward, yeah, they need to see that you're back at work.
Okay, and so that kind of just, sometimes I have my questions here, but I have a couple things that just keep jumping into my mind. But let's just say a person's debt isn't good and they're looking at, because I mean, life has happened, right? Well, actually, before we go to that question, I want to ask you, what about those people that have been doing deferred payments on their, whether they're a landlord or homeowner? How is that going to be looked at down the road as far as being able to qualify again? Or how does that affect or not affect your credit score?
So a mortgage deferral program, essentially not skipping your payments for, I think we have up to 6 months to do so, but your interest will still accumulate. So it is almost very similar to skip a payment, except that skipping a payment affects your credit score. Technically, this mortgage deferral program shouldn't affect your credit score or your ability to refinance or get a purchase. We say technically because this is so new. And from my other colleagues, I've heard them see when they're doing a refinance and the client has taken that deferral program and it says mortgage deferral, and a lender being not easy about that. No. But that's from a few colleagues. I personally haven't seen that. So I think it's all new. It really shouldn't affect your ability to get credit. Now, it's supposed to help with cash flow, but some people are using it, say, oh, I'm going to defer my payments and just keep the cash for myself and maybe use it to invest or buy something. That's not what it's for. So, and yeah, so again, it's new. We shouldn't see an effect on credit. And that's what the credit agencies have told us. But time will tell. Time will tell when they say, oh, you're too much of they won't say you did a mortgage deferral, but lenders may say, oh, you're a bit risky, right?
That sounds familiar. I've dealt with the Securities Commission, and they might inquire here and there about things that you're doing, and make a note of something or send you a letter saying, we noticed this, that you're in breach of this, or you're kind of on the edge of that, and so you go to fix whatever you think that they're talking about. And then you call them back and say, is it good now? And they're like, well, we don't give opinions, but we'll let you know if we think there's a problem. It's like, what do you mean?
It's just like this. They'll never say, oh, we're not getting you a mortgage because you're too old, like you're 95 years old, because that's discrimination. But they're just, you're high risk. So that's how they say it. But so mortgages are showing up on credit bureaus. So I would assume down the road, if I see a lot of mortgage deferrals, boom, 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 a lender might question it, even though they're not supposed to say it affects your credit. They may just say you're a little bit risky.
Well, and you said something there that's important too. With you said that a lot of mortgage lenders are putting like making a note on your credit. Do all banks and all lenders report mortgages that you apply for? Or are there some banks that don't? And if so, which ones?
So I'm not sure. I think, and I could be completely wrong, but I believe RBC was TransUnion at one point, because I would pull a bureau and I go, oh, your RBC mortgages is not on there, and they'll be on TransUnion. But that could change. I would say the majority of lenders are reporting on credit bureaus. Private lenders do not. And I believe credit unions are reported on bureaus. So
yeah. So if you're going through like banks and stuff like this, I'm talking to real estate investors that if you're looking at getting more properties, those private finances that you work with clients are sometimes a lot better to go with, because you're not stopped by, the bank saying you've got too many properties, we're not comfortable with your debt load, and we're not going to give you another mortgage. It's almost, to me, it's kind of like saying, you know, you're a little bit too successful for us, so we're not going to let you get any more successful.
Yeah,
That's kind of how I take it, actually. It's maybe not the way they mean it, but
yeah, it's true.
yeah, that's how I get it. So, I mean, one of the things that I wanted to talk to you about was those people that don't necessarily have great credit and maybe are looking at consolidating, because this is something that comes up with me, with my clients, because I teach people. I mean, back in the 1900s, I had bought, when I first got into the business, I had bought 39 rentals. And in 1 month, I ended up with 12 vacancies all at once because I closed on 9 properties, not even thinking I was so green back then, right? Not thinking that I should probably spread out the possession dates. I closed on 9 properties in 1 month, but I also had ended up with 3 vacancies that month. My property manager's like, just so you know, I'm going to have to fill 12 properties then. I'm like, oh my gosh, it was like freak out moment for a while there. I'm surprised I didn't become an alcoholic and drink too much wine. But anyways, I had to get through that and figure out another way to be able to hang on to these properties. And the biggest issue was the mortgages. If I didn't have to have a mortgage, obviously I wouldn't have the stress, right? So I had to come up with a way to get rid of those mortgages as fast as possible. And so I really took a deep dive into how the banks use our money to be able to make money off of our sweat and our money so that they make more money. And I thought, geez, if there's a way that they can do that with us, can we not use that same process back at them, right? Like right back at you, babe, kind of thing. And so I did figure this out back in the late 1900s. And I started teaching people how to get rid of them, how I actually paid off those 39 rentals in 11 years. And plus got rid of $30,000 in credit card debt without increasing my income. So this is something I've been showing other people. And I know that there's other programs that have started coming out in the last while that are similar to that. But one of the things that comes up a lot is, what about just doing debt consolidation? So could you talk a little bit about the concept of debt consolidation and how a bank sees that compared to the fishing formula, where we pay off debt with your current means without having to increase your income? And what is the difference between, how does that affect your credit? Paying off the debt that you have and paying it off faster compared to consolidating.
Okay, so from the eyes of, when you go and see an insolvency, they're going to say bankruptcy, consumer proposal. I'm going to say debt consolidation is the same as consumer proposal, so we'll put them in the same thing. Bankruptcy is, consumer proposal isn't as harsh as bankruptcy because you are settling your debts or you're still paying your debts within 5 years, and it stays on your bureau for 4 years, whereas bankruptcy stays on your bureau from 6 to 7 years. I can't remember, 6 to 7 years. So then consumer proposal isn't as harsh as a bankruptcy. Now, the eyes of a lender, a consumer proposal and a bankruptcy is considered a bankruptcy. So even if you've done consumer proposal and you say, but I paid my debt, I did my work, on the eyes of a lender, it's considered bankruptcy. The only difference is how long they allow you to be discharged from bankruptcy before they get a mortgage. So for bankruptcy is 2 years, discharge with 2 years of established credit. With a consumer proposal, it's 1 year discharge, and then you still need the 2 established credit. That's the only difference. But on a credit report, it does say bankruptcy. It doesn't say consumer proposal.
That's good to know.
Yeah, I always say included in bankruptcy, included in bankruptcy. I go, oh, you went bankrupt. I go, no, I had consumer proposal. It's just, it's the same as, the same. So therefore, that it's good to work with someone before maybe you see an insolvency trustee or something, to work with someone like yourself that's not so drastic with.
Yeah, because if you're actually, like when I teach people how to pay off that debt, and how to get rid of their mortgages, student loans, car loans, credit cards, all that kind of stuff, we're not looking at consolidating it all. We're looking at how do we reuse money in a different way. Take what you already have and get rid of the debt, but just in a different way, so that you're not consolidating it all. And it's not on your report because it's private again, right? It doesn't go on your report. I always tell people what you share with me stays with me. It's kind of like Vegas. See what happens in Vegas stays in Vegas, kind of thing. And we go through the whole picture. But the thing is when we do it, we're paying off that debt. We're not consolidating and making a proposal to the lenders to maybe accept something less. They're literally paying off that debt. And when you pay off that debt, compared to the way I teach it, compared to doing a consolidation proposal where you're still paying it off, that one looks like bankruptcy, whereas the one that I'm teaching, that one, when you're paying it off, does that one show, doesn't show up in the credit, right?
Right,
Right.
exactly.
So, but what does get shown is that you had this debt and you paid it off, and you did it in a very fast way. Now, how does that work? Does that show that you are actually understanding debt and they feel more comfortable giving you more debt, or how does that look?
Yeah, exactly. So when you see your credit debt go down, again, it affects your credit score and your debt ratio. So it works together. And so that's exactly what we use for mortgage qualification.
Cool. Awesome. Okay. So that's what I
Yeah.
wanted to cover here. I'm just going to check to see here. I think we've covered just about everything. Now, I know that we're supposed to be able to see our on Facebook the questions. So what I'm going to do here is just pop over and see if I can do that at the same time here, because I'm sure that there's going to be questions from people. I'm just going to double check, and I'm not seeing it. I don't know how that works. Okay, so I'm just gonna have to figure that afterwards, because I'm not sure where to see all the questions. I just see a
We're
couple.
still learning Facebook Live.
I know, right? So somebody please save us later and walk me through this afterwards. The first time is just kind of a trial run. So anyways, we're not going to answer any of your questions. Sorry. If you have questions, you can actually message me afterwards, and we can sort of go through that again in another live on Facebook when I get this figured out. But hopefully somebody will, go, hello, I know how to help you. You poor person. Yeah. So what I wanted to do is also share. You interviewed me a little while ago. I did mention that a little bit at the beginning, that you actually approached me and said, look, Candy, you've been through so much and you keep going. It amazes me how you keep going. And I ended up coming and speaking to your group, Real Women in Real Estate, about, how to keep going even when life sucks, because my life has sucked a lot in the last bit, divorce, cancer, being accused of fraud and having to be my own lawyer and beating the commission without a lawyer, things like this. Like, I've been through a lot of these different things, but I'm still going. Like, your comment was like, wow, you're back. I'm like, yeah, Tanya, I have never left.
You're amazing. Yeah.
Well, thank you. But thank you. When you talked to me about that, you had asked me to come and speak to your group, and my whole point about that was life happens to people. And when I say that, it's like literally happens to you. It's your response to the things that happen that kind of mold us into being the people that we are. And we went into quite a bit of depth about that. And there was a huge response. You had said that it was the first time you'd actually seen a room full of people when you had a guest speaker that actually had a standing
ovation. Yes.
Yeah, standing ovation.
Yeah, you were so inspiring. Like, we got goosebumps.
Oh, thanks. And so kind of at what I did something impromptu at that group. Is I decided then and there that I'm going to take what I've shared with everybody and break it down into an actual course of how to handle things, how to break down, when life happens, because life is always happening to all of us. Like, look at what's happened to everybody in the world. And COVID has had a huge effect on people, not just your credit and your debt and everything, but just your mindset and just keeping positive and seeing hope and light and at the end of the tunnel that, you can still be successful, even if you've been laid off and you're not considered an essential worker. I hate that phrase so much. Who says you're essential or not essential based on, whether, you're going to work at a certain place or not. I think that that's terrible. But I did want to do, and I did book a one-day workshop for everybody to work through these things, these events that happen in our lives that sort of form the personality of who we are, and that can break or make our ability to go after life the way we want to and have the life that we want. And sometimes it's just a little shift that we need to think differently. It's really, our world is like a reflection of what we believe, right? So I'm wanting to redo that event, because we booked it. I was going to be having it live here in Calgary, and then COVID happened literally the day after I booked it.
Yes.
So one of the things I wanted to do is I wanted to honor you and your group and everybody else here that is watching this. And I'm going to redo the event, but I'm going to do it here on Zoom. It's going to be a Zoom event. It won't be a Facebook Zoom event. I will record it though. So people, if they want to see it later again, but it's going to be a live workshop where we're going to be actually walking through all the different things that you know, things that can happen in our lives, things that, how to handle those things so that it doesn't affect us moving forward in our business. Because sometimes we bring that baggage forward in our relationships, in work, and everything else like this. So what I've decided is on December, I was going to say December,
No,
July, this month,
summer.
yeah, on the 25th, I am actually going to do this live workshop. It's going to be a free event on Zoom. So those of you who are watching this, if you're interested in knowing more about it, I will be posting it in the group, Real Estate Investing Foundations for Success. And you can register for that, and you will get information sent to you of how to get into the Zoom link and stuff like this to join that. And what I wanted to do is cover things like, you know, we're going to take a deep dive into, you know, how to keep going even when life sucks, how to not let big monumental things that are happening in your life stop you from going after the goals that you want. Because, you know, as in real estate, I'm sure you've also heard, you know, the phrase that, you know, we talk as real estate investors, having that real estate investor's lifestyle, right? And it's something that we actually get to live because of being a real estate investor. But sometimes those of you that are in real estate sometimes are struggling silently and not letting people know that you need help to get through certain things, or things that are blocking you from, you know, achieving the success that you want. And, you know, other people, you're seeing success from some people, but you're wondering, why am I not reaching that? Why am I not there? What's in the way? And a lot of it times it's what we believe. So it's going to be called, what is your BS? Your belief system. And we're going to be talking about that, because literally sometimes it really is BS that the things that we say to ourselves and believe in about ourselves, and we need to change that. We need to fix that. So I want to let you know I am going to be having this event. So I'll be giving you the information for your group, because I remember pretty much 100% of those ladies wanted to come to it. So I am going to be doing that. I want to let you know here on the live Zoom that we're doing right now on Facebook. So did you want to add anything at all today to what we've been doing, or what you want to say, or anything particular about working with a mortgage broker, or what's happening in the new rules?
Well, I just like working with, when I started off as an investor, we just had to make our own mistakes and live with them. And sometimes it'd be disastrous and sometimes it worked out. And I think it's important moving forward, especially in this time, to work with other people, so you're not alone. Because as I say, the reason why I formed that Real Women group, more for the camaraderie, because real estate can get hard, tough. It's glamorous and not all that glamorous. So especially when things come up and you don't expect it. So it's important to work with others and a coach like yourself.
Well, let me ask you, is it difficult? Is it stressful being a real estate investor?
Well, when COVID hit and having a portfolio of properties, I kept thinking, are the tenants going to pay? And what am I going to do if the tenants won't pay? And stuff like that. But yeah, it's got its highs and its lows, like anything. But that's why having a group of people is so important. If all the 16 years, and my husband's been doing it for 20 years, what we tell others now is don't do it alone. It's a big, what do you call it? Big lake, big pond. You know what I mean.
I know what you mean.
It's a lot for everyone. We can all work together.
There's more than enough fish in the pond for everybody, right?
You know, I meant to say that. That's why I love Candy, because you just clean up what I say.
Yeah, and that's true. Like, we have to be supporting each other. We have to be out there. I mean, that's one of the things is, with everything that I've been through, and for those of you who have not seen my story, it is in the group. I have a copy of the video that Tanya did with me, of us, her interviewing me about my story. And there are so many things that happen in our lives that can stop us. Like, I was being cyberbullied. I had death threats where people were, you know, sending me letters telling me how they were going to kill my children. I mean, so for those of you who wondered why I'm, you know, so new to doing Facebook stuff, is because I literally stayed away from social media because I was being cyberbullied. And I mean, I'm not the only one that things like this happen to. Life happens to people, whether the economy is good or bad. That, you know, that doesn't stop life happening. And sometimes the economy doesn't help, but knowing that you have a support system is massive. And then leaning into that support system and saying, hey, can you help me with this? Or can you help me with that? Or, can you help me see maybe a different point of view on something? Because your belief system on what you think is happening and what's really going on can be completely two different things. And that's one of the things that I realized, is that I had to feel safe and comfortable coming back out and sharing what I know. And that's one of the things that I have to thank Tanya for, is that, and anyone who's actually, been appreciative of the course that I teach, you owe it to Tanya for this, because of the fact that you're the one that said, Candy, you need to get back out there. You need to be sharing your story and encouraging people with it, because when you go through something really tough and then you come out the other side and you're still, 100 miles an hour running, and you're like, you're free, but you're still going, because you're like, it was so much work getting through it. Sometimes you have blinders on to realize that what you've done is unlike what a lot of people have been able to accomplish. And when you've done something like that, when you've pushed through a barrier and you're finding success, you need to be out there sharing that success with other people, so that they can also take that experience and put it into their lives. And their story will be different, but you still have your own story. And if you need that little boost, to just be inspired that if somebody else can get through something big, then maybe I can too, especially if they're there alongside me to support me. Mm-hmm. And that's what you've done for me, is to help me get back out and share my passion and share my expertise in this industry, because my expertise is unlike anybody else's in the industry, because of what I've been through, because of having to go up against the Securities Commission against fraud allegations, and learning how to be my own lawyer and defend myself that way. And also all the real estate that I've done, and all of that it's an accumulation of who I am. But my belief system around that was BS, and now it's not. It's so much different. I'm owning it, and I'm using it for the good of other people. And I do owe that to you for helping me to see that it's not just me surviving it and getting through it and my kids getting through it. It's then what do you do? It's like laying those tracks down, and instead of just continuing forward, make sure you're laying them down for other people to come with you. Like, don't just be the engine. Have a bunch of, boxcars behind you that are, hanging on and going for the ride with you. So I'm really grateful to you for that.
I love that. You're so inspiring.
Well, thank you. Thank you. So how do people get a hold of you if they wanted to reach out to you?
So, you know what, Tanya at yourmortgageexpert.ca.
Okay, cool. So that's what we're going to finish everything up with today. Thank you so much for being here, Tanya, and thank you everybody for being patient with us doing our first Zoom live on Facebook. And if anybody is interested in coming to the free event on the 25th, please just message me or make a note under here, a comment underneath this video, so that I actually, or the replay, I'll look everywhere for you. And you can also get a hold of me by emailing me at candy@foundationsforsuccess.com. candy@foundationsforsuccess.com. So that's another way you can also let me know if you want to be part of this free event. And I will be hosting that on Zoom. And Tanya will definitely be invited, because she's going to also be letting people know about it. And it's going to start at 10 a.m. Mountain Standard Time. We will record it for those that were registered to come. I will give them a copy of it. It will not be put on the public-private group here, but it will be available to everybody that was registered for it. Okay, so thanks everybody for coming, and thank you especially to Tanya for being here. And we will talk to everybody later. Thank you. Bye-bye.
Hey everyone. Thanks, Candy.
Thank you.